Good morning, Mr. Azour. First of all, a big thank you from GBSA and from the audience here for sparing your time. It's an honor and privilege to share this podium with you and get this opportunity to ask you a few questions in regards to IMF's view about what's happening in this part of the world and how its capital markets are developing. So it's been over 3 years now since the oil price began to find a new equilibrium. How does the IMF view the Gulf region's adjustments and its prospects looking forward?
As you know, GCC countries reacted fairly quickly to the decline in oil price by moving on two fronts. One is fiscal adjustment and the other one is structural reforms in order to prepare their economy for the post-oil era. And they have been progressing fairly well. On the fiscal adjustment side, certain number of measures were introduced, both to reduce their expenditures and to diversify their revenues outside oil. And this helped them to reduce the level of deficit by at least 50% over the last 3 to 5 years. And we expect 2017 that the level of budget deficit will not exceed 5.5% for the GCC. On the structural fronts, certain number of reforms have been designed and now they are in the process of implementing them in order to diversify their economy outside oil, for them to create jobs that will be led by the private sector, and also to make the economy less dependent on oil and able to create jobs for the youth, allow private sector to lead, and also embrace certain number of transformations through public-private partnerships, as well as also promoting technology as a way to create growth.
So you basically feel that the fiscal adjustments and the structural reforms have been quite commendable or impressive in terms of adjusting to this or low oil prices. Is there anything that you think has been missing or that you would like to see in terms of the areas of reforms or the speed of reforms that you are seeing here?
Well, there are three issues. One is the commitment. I think the commitment is there. We are seeing it with the resolve of the various government to prepare for a certain number of key fiscal as well as also structural reforms. The speed and the composition is country specific. Each country has its own peculiarities. Some countries who have buffer and they have the luxury, in fact, to pace the adjustment in a way to have the least impact on their growth. Countries with less buffers, they need to accelerate the fiscal adjustment. I think what is important going forward is to pursue the diversification on the revenue side by introducing what is being planned as new reform measures. Shift the expenditures to be more toward capital spending and protect social expenditure and create additional fiscal space on the current expenditure side. And I think the wage bill offers the opportunity to create additional space, continue what they have already started in terms of reforming their subsidy system, especially on utilities and fuel. And last but not the least is to in fact move to a balance sheet approach whereby they think medium and long term in terms of their liability management as well as also asset management.
You just mentioned liability management. In that regard, yes, this part of the world is going to continue to have budget deficits for some time till the adjustment is completed. In that view, how important is it from your perspective to have access to both domestic and international capital markets for this part? Not just the sovereigns, but the sovereign-owned corporates or even the large independent corporates.
Well, actually, it's very important to develop access to markets, both for sovereign issuers. As you know now, the GCC issuers are, for example, for the half 2017 have been issuing more than $30 billion. Therefore, financing their deficits through access to international and local capital markets is becoming more important. And it's also important for private sector issuance. This will allow private issuers, financial sector, to access a wider range of financial resources. And also this is something important for the investors, international as well as also local investors, that will allow them to diversify their investment beyond equity and exchange. This is something that also would offer the opportunity gradually to create a regional debt market that will in fact allow the market to provide access to a wider group of issuers and also to create through the depth of the market ability in fact for the market to become one of the important debt market globally.
The benefits of debt capital market obviously are numerous. From IMF's perspective, what do you see as the biggest hindrance? I mean, we could have been sitting here 10 years ago and talking about the same thing in terms of developing local currency market and debt markets here, and yet the real progress has only come in the last 2-3 years. Yeah? What is the biggest hindrance, and what would you recommend as to how to overcome that hindrance for deepening these markets?
Well, first of all, the development of the debt market should not be a replacement to adjustment and reforms. And it's very important to pursue both fiscal reforms as well as also structural transformation of those economies. And this is where this debt capital market would help. For that to happen, we need to work on 3 levels. One is to strengthen the macroeconomic stability, and this is the best way to get access to the market at very good conditions. B is to develop the market infrastructure, have good debt management offices, good market infrastructure in terms of trading, in terms of issuance, and also improve the legal framework. And third level is on the investor side. This should be a way to diversify the investor base, reduce the risk of crowding out finances from the private sector, and also open the markets to a new type of investors, being institutional investors from the region or outside, as well as also foreign investors who could come and invest in the local currencies.
Mr. Azour, in your previous life as finance minister, you successfully steered through some challenging times in managing sovereign debt and dealing with markets. Yeah? Based on your experience, do you have any observations that the regulators and officials here can take on board?
Well, first of all, I think one very important element is predictability and transparency. Predictability about the rules, the regulations, about the debt strategy for issuers, transparency in terms of providing the needed information for both investors as well as also for rating agencies and other related institutions to better understand and reflect the true reality of the macro situation. 3 is to develop through the regulation of the financial community well-functioning and well-regulated markets that will give additional confidence to investors, provide through market making additional liquidity to the market, and by reducing the gaps between the regulation of different countries is to widen the scope of the market, and whereby you will have not only sovereign issuers coming to the market, but also corporate and non-sovereign coming to the market and issuing fixed income instruments or long-term debt instruments.
None of us has a crystal ball, so it's hard to see. But based on your helicopter view of the progress you have seen, of the challenges you have seen, where do you see the market 5 years down the line?
Well, it's very difficult to answer these kind of questions, but I think there is a resolve in the region and interest to broaden the capital markets. The fact that countries need to finance their deficits and they are benefiting from the global favorable conditions on interest rate and on liquidity. This is in fact is broadening the scope of issuers, is in fact increasing interest and attention of investors in the region. And I believe if reforms are introduced on the market structure, on the regulation, and if there is greater cooperation between issuers, between market participants through, for example, an association like yours, this would be the right mix of movements, or if you like, a right mix of initiatives that will progressively create sizable market for issuers to be interested to come and tap, for investors to look after, and to look after opportunities in these markets. And I think this will allow also to diversify what the capital markets of the region need. We have well-functioning equity market and exchange market. With fixed income and debt capital markets, this in fact will complete the whole picture and will allow also long-term investors, pension funds, to come to the market and provide additional depth to it.
Thank you, Mr. Azour. On behalf of GBSA and the audience here, I present our sincere gratitude for your time. Thank you very much.
Thank you.